that some of these stocks have looked really weak today. Anantraj, Apar Industries and a few others. Kaynes Tech, I wonder what Kaynes Tech is doing, because at about 12:30 when we did the YouTube live, Kaynes Tech was down and it is still down in trade. What we did promise on YouTube live is talk about why is it pharma is cracking, and we'll talk to both Kush and Aditya about that. But it's time for our bull and bear segment, and Kaynes Tech is the one in focus because the stock has taken a hard beating after the firm revised its FY25 revenue guidance marginally, I might add. I think, Puneet, is it the valuation weight that is weighing in on the stock price today? What is working and what is not?
Well, certainly, there is valuation at play here, because the 100 crore, fall in terms of guidance for this fiscal year has eroded roughly 5,000 to 6,000 crores in market cap. And when you look at the positives, because the results did report a 30% growth in terms of revenues in Q3, and that's a decent growth. It is lower than the 56% growth that was, expected in this particular quarter. And that's why, value expectations not being met at high valuation is the key here. Apart from that, as you rightly said, that's been one of the bear cases, because high growth has been something that's been synonymous with EMS companies, and this is the first fiscal year where we are seeing some consolidation in terms of expectation, either on EBITDA margin for revenue. For Kaynes Technology specifically, they've lowered their revenue guidance or roughly, but by just a margin 100 to 150 crores. But the stock has tanked in that case, and that's the first bull and bear case that despite a strong Q3, the revenue guidance being cut and expectations not being met in terms of the high growth is one of the key factors. When you look at the other key factor is also there, while, meeting this 2,800 crores and 2,900 crores is also going to be something to watch out for, because the company will have to report an almost roughly 70% growth in terms of its, in Q4, specifically in FY25, while the management has very confidently said that they'll be able to do that in the next quarter while maintaining an EBITDA margin of 16%, something they've not done over the last 12 quarters. So it's going to be something to watch out for as well in terms of numbers for Q4 after Q3 as well. Apart from that, let's look at the third aspect, which is, the new verticals. Smart meters, while will propel growth going forward as well. The market seems to be in a mood to reward what's consistent going forward, and that's what was evident after the Amber Enterprise numbers and other EMS players. The company has mentioned that they'll stick to their segment, go into components, and those kind of plannings have propelled the stock another in the past 1 month. While Kaynes is down 40%, Amber has corrected just 10%, while something like a Dixon is also down with the new semiconductor foray. So it is something interesting what's happening in this particular market, that is rewarding the continuous efforts in this consistent new business and staying with a high margin business as well. What's interesting is in this fourth case is that 4,500 crores of revenue is estimated in FY26. That's a 50% growth from the 28 to 2,900 expected in the previous FY25. But it will come at a cost of high capex over the next 5 years in the semiconductor as well as the printed circuit board assembly systems. And lastly, as I mentioned, the stock price correction, it's been 40% for something like a Kaynes. It's the highest almost in the EMS sector as a whole. While despite the correction, stock is trading at a 60 times price to earnings. So maybe just the froth has been evaporated or removed from the market cap. It's still an expensive stock, but overall the company's entry into smart meters via an acquisition, they have a new facility that's come in Hyderabad, PCB entry as well as semiconductor foray, which they've already announced, and an overall revenue of 8,000 crore that the company has guided is something to watch out for in the future as well.